Good morning, everyone, to Market Insights. This is our monthly market stats, but it's always so much more. We've got Vice ARMLS Chair Scott Kiburz with us today. And today is exciting. Scott and I talked yesterday, and we're going to dive into the cities. We go over the city stats every month, but they're changing. Inventories a little bit better. Today in my BNI, one of my agents says we have 13 days of inventory, which is exciting, right? So let's go ahead and dive right in today, Scott. If you are ready, we're going to start out with our fast facts.
Beautiful. So, ladies and gentlemen, what's really happened in the last 30 days is our active inventory in Maricopa County still hovering between 3,300 and 4,000. It did tip about 4,000 over Memorial Day weekend, but it's been pretty consistent between 35 and today, yesterday, 3774 actives. We closed 8169 last month in terms of doors. And so please know our closed business for this time of year is very consistent. And my compliments to everybody on the call and everybody out there in real estate world, because we're closing a consistent number of doors every month with 1/3 to maybe 1/4 the inventory we had this time a year ago. Now, it's keeping our absorption rate right now. It's at 194. It probably is going to land at about 208 here in the next couple days. A 200% absorption rate is where you get 13 days of inventory. We're adding new listings and they're going right off the market almost immediately. And we'll get deeper into that here in a minute. For everybody on the call, I want you to make sure you're checking coming soon. Coming soon is a status, just like active, just like pending and closed. Coming soon is a status. We've been running in Maricopa County around 700 to 750. All of MLS together is about 8,500, or I'm sorry, 850, 8,500, 88,000, I'm sorry, 850. What you need to know there is the majority of coming soons are happening in Maricopa County. When you look at 729, which was a couple days ago, ladies and gentlemen, that's about 20% extra of inventory that is coming to the market. So with such low inventory, to go and say, hey, here's 20% more coming, please check there. Find potential listings that you could take your clients to as a buyer's agent. Ladies and gentlemen, please know interest rates with a credit score of 760 or higher. It's not uncommon to be sub 3.5 interest rate on a conventional loan, probably between 3.25. FHA with that type of credit score is going to be in the high twos. And then, ladies and gentlemen, we pierced a significant number. We pierced 505.60 for our average sale price in the MLS last month. That is significant. If we just stop the meeting right there, that is noteworthy, and that is a great discussion perspective on the market at the moment. Sarah, let's continue, please. This is from John Burns. I just included only one outside the market numbers perspective to share with you. And in the bottom right corner, quadrant number 4, those who can't relocate are seeing their housing costs skyrocket. Now, ladies and gentlemen, when you look at your buyers, somebody needs to acquire a home and they're saving for their down payment with appreciation north of 20%, depending on your city, boy, it gets harder and harder to save for a down payment. At the same time, rents are going up. It's important to know that buyers, gosh, if they need to get in the market and get into home ownership, it may be painful right this minute, but if we continue with another 10% increase in home prices in the next 12 months, they're going to thank you 6-12 months from now that you helped them get into a home. At the same time, John Burns has just a data point. They're tracking the new segment rent to own, where homes are being built and going straight into rentals. They're not even hitting the market. They have tracked various builders, and when you aggregate that up, ladies and gentlemen, it's $8.4 billion worth of new rental homes, brand new homes going straight to rental. That's never come into our market in terms of helping our first-time home buyer, move-up buyers get into a home. Data point worth sharing. Sarah? Here's the basic information. 3781 on June 1st. We sold 7470 in solds and are under contract just under 10,000 at 9946. That's a great perspective of what's happening in our market at the moment. Next. What I wanted to share here, there should be 2 slides coming at you. So at the very end of May, on your left side, the sold to list ratio, when you look at the red and blue lines, you start to see a slight arc. And we queued that up last month saying, gosh, is this going to level off? And we're going to track that specifically. On the right side graph in the red and blue vertical lines, you're just seeing the rise in sale price per square foot. By the way, this is all of Maricopa County. So just jump ahead a couple days and the story continues to evolve. You see that slight arc has now started to trend back up skyward again. And we're just under 104% average sale price on a lot of our properties, 104. That's in spite of or in addition to the increase in sale price. Sarah? Backup 1, this is just showing, ladies and gentlemen, the blue line is months of supply, just seeing how far down this is for all of Maricopa County. And this was just yesterday morning at 202% absorption rate, and we had 0.49 of 1 month of inventory. 2 weeks of inventory would be a great scenario for that. So what we're going to do now moving forward is we're going to take a deeper dive into individual cities, and we're going to start again with all of Maricopa County to set the homes or rent. We're also seeing that the value of Arizona, you can get a lot of home for its value when you're looking in the Bay Area, living in the Bay Area, California, the West Coast, Chicago. Home ownership is a great value in Arizona, and that's showing up in both rentals and home sales. Sarah, can you go next, please? Are we still connected together? Ah, beautiful. Okay, so these next 3 slides are designed to help educate our agents, and if you feel comfortable, these are slides that would be very easy to share with clients. So there's 3 slides in a row: current listings and under contract and sold. But let's go through this. What I want you to visually focus on, number 1, are the green bars and the dip on the right side of the green bars. That's showing the number of active listings, somewhere between low 3s and still under 4,000 active listings for the last 5 months. And when you look at the average cost per square foot and the median cost per square foot, and you go to the far right bottom numbers, you see that we're up 36% and 32% in Maricopa County. Ladies and gentlemen, that is all MLS data, and that is all Maricopa County. That is our market directly. Sarah, if you would for me, the next slide. After current listings, we go to under contract, I believe. Yes. And what you're seeing there is those green bars we have a high number on the far right. The last 5 months, our volume under contract is north of 9,000. And so it's serendipitous that we have low actives and high under contract. That's the 1-2 punch. The average under contract price is up 30 and 28% for the average and median sale price, respectively. Next slide. This is the sold volume. And so our sold volume is really pretty consistent of where we would be this time 2 years ago. And then even during the pandemic a year ago. This is fairly balanced in spite of the pandemic that we've gone through the last 18 months. And right there you look and say, well, gosh, our sold price is up 25% and the median sale price up 23%, all in Maricopa County. And so when buyers are like, I'm gonna wait for this to go down, boy, all the national indicators are saying that there's still legs in this market for us. And for all the people who have listings and they say, I want more, if the seller says, I want more for my house, if they don't have to turn around and become a buyer, they may wait just a couple months and still get more. It's out there. Interest rates are low. The seller still may get more. Sarah? Ladies and gentlemen, this is a bonus slide. I normally don't include this slide, but I wanted to illustrate how our market has been affected. And so I put in the light green, normal green arrows, the year 21 versus 2020. And then I put two different color codes in the month of supply, was what I wanted you to focus on. In 2021, the top medium green arrow is pointing to 0.3, 0.32, 0.52. That's the sweetest spot of our market. And that is how many months of supply we have. It's even less than a half a month. It's basically days in that market segment. Traditionally, in the dark green is 3 million plus. The very bottom green arrow, we normally have 32 months of supply at 3 months or 3 million sale price right now. That's what we normally have. Even in the luxury market of Arizona, north of 3 months or 3 million, we're at 4.1 months of supply. All segments of our market are being affected right now. And that is our market of the moment, supply versus demand compared to a year ago. Sarah? So now what we have here, ladies and gentlemen, for the balance of our time together, and thanks everybody for hanging with us and pivoting with us. Normally we don't go into hard detail here, but there's about 18 cities that are gonna consume the rest of our time together. And we just wanna take a quick look and see what's happening. And so I'm gonna explain the bubbles on the first one, and then as we move to the next city, we'll just take a focus on one of the 5 bubbles of what's important to know about that market. Now, please know also the first one here is Apache Junction. Ladies and gentlemen, there's multiple zip codes in Apache Junction, so we can search and hover over all of Maricopa County, we can hover over a city like Apache Junction, and we can actually drill into a specific zip code of Apache Junction if we wanted to or needed to. A major metro like Phoenix, where there's multiple zip codes, that is important to distinguish Arcadia, Ahwatukee, North Phoenix, Norterra, what those different markets look like by zip code. So here we go. So active listings in blue is down 44.8% in all of Apache Junction. When you follow the white line over to the right, you see that there's 53 listings in all of Apache Junction. And then right below that, you see in smaller text, May of 2020, we had 96. So you can just say, well, what's common and where is Apache Junction at totally? When we have such low inventory in the 3,500 total active listings, and know that we have 153 primary and secondary zip codes in Maricopa County, it comes out to between 20, 21, 22 active listings per the entire zip code. That's our market of the moment. Now, while in blue we're down 44% in active listings. The green, sold listings were up 51%. And you follow the white arrow over. A year ago in May, we sold 62 homes in Apache Junction, and we sold 94 this past May in Apache Junction. Median sale price, boy, people are driving until they can afford. Apache Junction here, it's up 29.1%. A year ago, the average sale price was $163 a square foot in Apache Junction. Now it's $211. That is how you read that slide. Month of supply is down by 63%, down to 0.56 months total. And days on market have gone from 42 down to 20. Days on market are down 52%. So that is the complete explanation of that slide. It's designed to be an infographic for agents and their clients and use it accordingly. And now we're going to go through various cities much quicker, but what's happening in these various primary and secondary cities. Sarah, if you would for us, please. Buckeye. Buckeye only has about 4% of its total build out done. We can add 1 million doors and 1 million people to Buckeye, but please know its listings are down 75%. And at the same time, its median sale price is up 38%. Holy cow, that is significant. Still lesser expensive than Queen Creek. Queen Creek is at $211. Buckeye average is $194. Sarah? Chandler, great place to live. We know that the chip industry, Intel's building a couple big plants there. That market is up 30% in Chandler from a year ago in yellow. Active listings down 64%. That metro is getting billions of dollars worth of new industry coming into that metro. Look for that to hold strong in the next 12 to 24 months. Sarah? Gilbert, 32%, right next door. Great place to live. New city, exciting, up 32% in median sale price. Sarah? Glendale, West Side, near the Cardinal Stadium. We just announced we're going to have a Super Bowl there in a couple years. Median sale price is up 32%. At the same time, active listings are down 43. Sarah? Goodyear, 33%. We know that Amazon put a huge warehouse out there. They're building 11 total in our metro. Avondale, that corridor is becoming highly desirable for many reasons. The quality of life and the new industry that's coming and will remain there. Also, its proximity to Luke Air Force Base. Sarah? Litchfield Park, one of the more affluent areas out there, is up 32%. They have just 22 days on market. Sarah? Town of Maricopa. I jumped further south and included this one. And I wanted to point that out for a couple of reasons. By comparison, Maricopa a year ago was at $122 a square foot. Today it's at $169 a square foot. That's $40 to $60 a square foot less or expensive than Chandler, Gilbert, Avondale. And I point that out because people are going to drive there just so they can get a home. And while that's happening, Maricopa, the town of Maricopa County, town of Maricopa, up 38% from a year ago. Significant rise, just 9 days on market. Holy cow. Sarah? Mesa, same time, 27% growth. A lot of things exciting happening out in Mesa. Just 16 days on market for average homes listed. Sarah? Paradise Valley, holy cow. Who would have thought the most expensive zip code in our state would be surging 47% from where it was a year ago? 47%. It's currently selling at an average of $466 a square foot. And please know its average active listing is now north of $600 a square foot average together. That's not just the Ritz-Carlton. That's not just the Borgata area that's being built. Paradise Valley as a whole is average list price is over $605 a square foot. Significant rise. Sarah? Peoria, phenomenal. 26% increase. Sales active listings are down 66%. Days on market, just 2 weeks. Just 2 weeks and they're gone. Sarah? Phoenix, the bellwether, single family here, up 28%. All those zip codes aggregated together. It's currently at $236 a square foot, 16 days on market. We have, ladies and gentlemen, somewhere around 1.8 million people in Metro Phoenix. We have just 1,015 active listings. That's single family, townhome, condo, manufactured home. 1,000 doors supporting 1 million people in Metro Phoenix. Now you see the pressure, and now you see why being highly in relationship with your buyers and sellers has never been more important. Having great communication and teamwork and strategic thinking to help your buyers secure a home and your sellers select the best buyer that fits their home. Sarah? Queen Creek. We have just 14 days on market. It's up 34%. A year ago, you could have bought in Queen Creek for $160 a square foot. It surged north of $214. Sarah? Scottsdale. Boy, the average sale price in Scottsdale for condos, manufactured homes, single family homes is now like $930,000 average sale price in Scottsdale. It's up 33% to 332. It is just done great things in terms of people wanting to live there. It's a very international city for sure. Sarah? Ladies and gentlemen, I took a one-off here and I was trying to create an understanding of what's happening. And I'm going to pause here for a second. If anybody in the chat room or anybody online has questions, tee those up into the chat right now and we'll get to them here in just a few minutes. The town of Superior is east of Phoenix, east of Apache Junction, Queen Creek, on your way out to Globe, Miami. It's about an hour, a little over an hour and 10 minutes from Central Phoenix. And I put this slide in here for this town, definitely a secondary city. It's up 50% from where it was a year ago, 52% average sale price. There's just 6 listings in this town. And when I say people drive until they can afford to buy. This is a great example. Who would have thought I could have bought a house a year ago and it's worth 50% more in this town of Superior? There's more work going to be done mining copper out in Globe, Miami. That's going to be billions and billions of dollars to our state economy. That's happening. And then people that don't mind driving into their career to their work, an hour commute from Superior into the central part of the Phoenix. If that's what I need to do to own a home, people are doing that. So I just wanted to give the example of our whole metro is ascending in terms of average sale price in the high 20s, low 30s range. But there are examples like Superior where it's up 52% from a year ago. Next, please. Surprise, up 38%, 202 average sale price, just 19 days on market. Supply is 0.3 of 1 month. Holy cow. It is in demand. Next. Sarah. Tempe, landlocked city, obviously ASU is doing well. It's up 27%. Listings are down 53%, only 99 doors. A lot of investors here, a lot of apartment condos being built, yes and yes. But also it's a great community. And so with it being landlocked, it's not going to get any bigger size-wise, land-wise, but it's still in growth mode and one of the most consistent appreciating communities in our metro. Sarah? Tolleson, just off the I-10 and the 101, just south. Ladies and gentlemen, just 17 active listings in that metro. It's up 38%. So as you have advanced growth to the west in Goodyear, Avondale, Buckeye, and you need to go to work there, you could own a home in Tolleson and commute west very easily. You could commute due north up the 101 into Peoria and work. And you can commute obviously pretty quickly back into Phoenix with the South Mountain Freeway that's been built. Access around through Ahwatukee and south towards Casa Grande makes Tolleson just a more and more desirable place to live geographically, and clearly with an appreciation at 38.9% in the last 12 months, it is very valid. Sarah, if I'm not mistaken, that might be our last. Oh, Wickenburg. I added Wickenburg as another example. Up 24%, active listings down 43% from where they were a year ago. 201 average square foot. Ladies and gentlemen, that's another example of people will drive until they can afford to buy, and or they want to get out of the hubbub of the busy metro and go just a little north to have a little calmer lifestyle. Wickenburg becomes a very good answer for that. Sarah? 10 signs we're in a bubble. This is from 2013. This is something to read on a one-off. It was noteworthy. Signs of a bubble. When we look at June of 2013, if we could have seen all this, we would have invested real estate completely different. One, we would have saw the height of the bubble and what to stay away from. And ladies and gentlemen, our market is nothing like these 10 key things. Sarah, if there's things in the chat, this is a time for that. You're muted, Sarah.
Yes, if anybody has any questions, please let us know. If you have any questions, after the presentation, reach out to your business development managers. They're happy to reach out to Scott as well and get those answered for you.
We're right at 10 o'clock, Sarah. I think you did a great job, even with the pause interruption. Thanks everybody for hanging with us. And those are the market insights for this month. I was fortunate, quickly, I'll close with this thought, Sarah. I was fortunate to be on the National Associations of Realtors meeting between this time and a month ago. And there was a panel of about 75 agents on a committee called the Real Estate Economic Committee. And Lawrence Young spoke. He said, ladies and gentlemen, this is going to be around, our market at the moment is going to be around about 5 years. There's only 3 ways out. Option 1 is we build inventory to get us out of this low inventory, low active inventory situation. We build out of it. 2, we raise interest rates, so it makes it harder to buy. Or 3, we raise home prices. And so it's going to be a combination of those 3 over the next 5 years. but Lawrence was saying this is going to be around for several years. Then there was a situation where this group of about 70 people were on, and there were short snippets from about 20 realtors like myself who just explained what their market is. And if I can just bring a little levity to our people who are listening in today, the first person to speak up was from Jacksonville, Florida, and an excited agent. And they said, gosh, we're seeing sometimes 3 to 5 offers on a home. 3 to 5. We're seeing 30, sometimes 40, sometimes 50 offers on a home. The next person said, gosh, people are starting to do an open house on Saturday and just looking at offers on Monday and picking the best offer. Well, we've been in that market for months and months. Another person said, gosh, there's 2 or 3 people waiting in the street for the next showing. We've definitely seen that. You get the essence. About 20 people spoke. I was biting my tongue the entire time. I did not pipe up and say, well, in Phoenix, we would be fortunate to have the market you're in. And if I were to say anything to them, and I didn't, I would have said, be on the lookout because this is what could be happening. So we're monitoring this market very closely. We're listening at the local stage, the national stage, and the international stage because there's so many people have a focus on Arizona right now. And we'll continue to bring this information to you at this time. I hope you find it helpful. And please know the team at Landmark has always done a great job in making things easy for everybody. If you get a chance, feel proud and confident to use them. Sarah, I always enjoy this time together. Thank you. If you had any closing insights, I welcome them now.
Yes, thank you so much, Scott. If anybody has any questions, like I said, please get them to us. We will be getting a copy of this recording. I'll go ahead and I'll put both copies of the recording, the beginning and the end together, and we'll get those to you as well. So if you'd like a copy of the recording, please reach out to your business development managers. Thank you to Beth, Becky, Melinda, Mary, Zach, Patty, Michael, and Jessica. I got to remember to update your slide. It's funny when we do this once a month. It's all in the details, right? So I'll make sure to go ahead and just order that right now for Jessica. And thank you, as always, Scott. I loved our in-depth look today at the different cities. I paid very close attention to particularly the square footage, the median price on that. And it is so interesting to see how, the closer you get to the center part of Phoenix, the higher that goes up, and the further you are out, the lower it is, kind of reflecting what we talked about yesterday, and that people are, to get those affordable house prices, they're headed out of town. So it's going to be really interesting to see how this just continues to evolve and impact our business here in the Phoenix area. So thank you, of course, Scott. This is always such a pleasure. This is great information. Please utilize this information with your clients. Be the person in the know. And thank you, of course, to Landmark Title for having the ability to bring you this great market information every month. We have 6 offices across the valley to serve you. So please think of us on your next contract. And Scott, the next month, the first Thursday falls on the 1st. So I imagine we're going to push it back to the 8th next month, correct?
You are 100% correct, because the data that we use comes from ARMLS. The data is crunched the day of the 1st. It's released the morning of the 2nd, around 3:30 to 6:30 a.m. And I'm just not able to prepare it on the day of the 1st. So we want to get to you as fast as we can. It will float to the next week in July because of that.
But we will keep you guys updated. We'll send out reminders that it's not going to be the 1st. It'll be the 2nd Thursday of the month, same time, same place on Zoom. And we'll see you all there.
Thanks, Sarah. Have a good day, everybody.
Thank you. You too.